Hey everybody, I hope everyone is doing well and had a good day. This video is going to be a brief recap of the Emini 5-minute chart for Thursday, December 26th, 2024. Here's the daily chart going into the day. And at this point, to me, it looks like the market is in a trading range. We had a tight trading range up here, and then this big bear breakout. Surprising bar, obviously much larger than all of these prior bars, went a far distance below these bars as well. And the expectation is this breakout will get a second leg. However, because the market is in a trading range, the pullbacks can be deep and the second legs that traders are expecting can be delayed. So what I mean by that is we had this bear breakout of this tight trading range. Here's the breakout point. We have trapped traders up here. We have traders who doubted the bear breakout. They did not sell, and they missed out on the selling. You have bulls who are buying. We're in a bull channel, and basically every time traders bought the moving average and scaled in lower, they made money. So they're doing the same here. Those bulls who bought got trapped into a losing position. And then you have bears who they did sell, and they're betting on the downside breakout, but they did not trade as big as they maybe would have liked to, because at this point, the probability was not yet high. Maybe it's 50-50 in here. But after this, they are also looking for a pullback to sell, to add on to their winning position. So we have three types of traders, all looking to sell. The bulls want to see a rally closer to their entry price so they can avoid a loss or exit with a smaller loss. Bears also want to sell a deep pullback so they can enter on basically at a discount. So here's a big breakout, and we're getting vacuumed up to the breakout point. So I suspect we'll touch, or at least come close to touching, this breakout point. However, if and when we do, I'm also expecting there to be resistance there. And look at the rally compared to the breakout. The breakout was just one big bar. The rally has been really 3, 4, maybe even 5 bars if you include today, with lots of overlap. One more thing. So even though the prior day is a bull trend bar closing on its high, crossing the moving average, just look at the context and ask yourself, what is it really breaking out of? Every breakout is a vacuum and a climax. And you don't know what the market is testing and what's going to happen once it tests wherever it's going. And so if we are just going to test here, we may have sellers above this bar, even though it's a strong bar. And here's the 5-minute chart today. We had a gap down going into the day, and you can think about gaps the same way you think about breakouts. There's a space between two prices. The price was here, now the price is down here. From the close of the prior day to the open of today, that's a bear breakout. Second leg down likely, trap traders above. Bulls try to reverse once, maybe twice, maybe a third time, and they're failing, and then we get a give up bar on bar 5. So you have bulls hoping for a bounce. You have bears also hoping for a bounce, both looking to sell the pullback. And at some point, we go sideways for 2, 3, 4 bars. Traders conclude, we're not going higher, I better get out. The bulls are thinking, I better get out of my longs. And the bears are thinking, I better sell because it's not going any higher. And that leads to this big breakout bar on 5. It's a decent bar on 5, little overlap with the prior bars. Second leg down likely. However, there's no follow through. Look at bar 6. So we had buyers into the close of bar 5, and that is suspicious because in strong bear breakouts, you want to see bars closing basically on their lows. It doesn't make sense for there to be buyers into the close of a bear breakout if it's truly a strong bear breakout that's going lower. So traders probably wondering, is this going to be the start of a bear trend, or could it be a second leg trap? 1, pullback, 2, and let's look to the left. And we had this rally from all the way down here on the prior day. It really might be close to a 50% pullback. So here's 50%, broke below it, but couldn't get consecutive closes below the 50% pullback level. So bear breakout 5, but no follow through 6. 6 and 7, breakout and follow through, but breakout of what? Well, it's really a tight trading range. Now we're at the top of the trading range. Traders probably looking to buy a pullback. But think about the traders down here. Those who sold the close of bar 5, trapped on 6 and 7. These traders are trapped, hoping for any pullback to buy. Bears who sold down here, hoping after we go up here, hoping the market comes back down so they can avoid a loss or exit with a smaller loss. Bulls who did not buy down here, they missed the rally. They're also looking to buy to capture a second leg up. Now look at bar 8. Bar 8 is a strong bear bar, but the context is bad. So it's an outside bar, expanding triangle in an overall trading range. So probably more buyers below, but second leg down likely. We pause, we test this breakout point. We get a brief second leg down. 1, pullback, 2, and then depending on where you start drawing, maybe from this low to this high, maybe you just measure the bull bar, maybe just 6 and 7. However you do it, we're around a 50% pullback of the rally here on bar 10. And now it's 2 legs down, lots of overlap, and traders bought. Now through here, I also thought bars 18 and 19 were significant. So up to bar 17, spike, pullback, channel. Traders may be expecting the market to reverse after a couple of legs up, come back and test down by the bar 10 or 11 low. Spike, pullback, channel, and this evolves into a trading range. We come back down here. Then we got bar 18, and then follow through 19. So of this trading range, and maybe we include, let's say, bar 17 broke out, bar 18 broke out, and bar 19 broke out. So the bulls are getting a breakout of a trading range. And the traders who are selling here, maybe they're selling here, hoping for the market to test back down here. They're getting trapped, and they're hoping for any pullback so they can avoid a loss. So if the market pulls back, probably buyers below these bars. We get a small pause, but then we continue to rally. Bigger bar, 23. But remember, there are trapped traders down here. Now we have a rally from 16 all the way to 22. Strong enough up for a second leg. So probably buyers below. We're testing a minor reversal area, 19, 20. Some overlap, some dojis, maybe the start of the channel. Spike, pullback, channel. Probably buyers down here. 23 may get a second leg down, but so far 23 is just one bar, and this is probably a minor reversal. Bad follow through, 24. I also thought this was really interesting. Why did 24 reverse here? Well, the way I see it, look at the tails on bars 17 and 18. So the tail from the high to the close of 17 and from the open to the low of 18. On a smaller time frame, this is a bear breakout. The market was up here, and then it went down here. And if you go to a small enough time frame, that was a bear breakout that was expected to get a second leg down. So you have traders who sold down here thinking they could scale in, maybe scale in here. But the point is, second leg down was likely. And then they got trapped. And If we look at the midpoint of this sell-off from here to here, 17 high, 18 low, look where 24 tested. We tested the midpoint. So traders were so disappointed by the rally that rather than trying to get out down here, the bar 18 low, they'll take the midpoint, and traders bought. So no follow through, 23, 24, 25, bold reversal, second leg up likely, getting more follow through. It's a tight bull channel, so only better to look to buy, but okay to buy pullbacks rather than buying new highs, because when the market makes a new high, we're finding sellers. Here's yesterday's high. I like to draw the prior day's high and low. So down here's the low, up here's the high. At this point, which is more likely? Are we going to test the prior day's high or the prior day's low? Right now, it looks like we're going to the prior day's high. And the reason the prior day's high and low is important is because most bars are breakout bars. Most bars on any chart are not inside bars, and that means most bars on any chart break out of the prior bar. Either they break out above the high of the prior bar, or they break out below the low of the prior bar. That's true in any market, any time frame, any chart. And so that's kind of the daily chart context applied to the 5-minute. I'm always wondering about the prior day's high and low. And at this point, it looks like the high is a magnet and we're trying to get there. Now, if traders think we're going to the prior day's high, why would they sell here? If bears think we're going up here, why sell here when they can sell just a little bit higher? And then the same with the bulls. Why would the bulls sell to take profits on longs if they believe the market will soon be up here? They're going to hold on to their long positions, take profits up here at the magnet. It's also 6,100, big round number. And we vacuumed up there pretty quickly on 27. 27 was either exhaustion or a measuring gap. 20 bars into a rally that started on bar 5 or 6. Now we're 20 bars in on 27. We're getting a big bar. And there's a gap from these highs to this close. Traders are seeing, is this going to be a measuring gap? We're going to go for a measured move up. Or is this the end of the bull trend? We're going to fall below 27 and close the gap. And in this case, we're going sideways, but weak reversal attempt. Looks like we reached the minimum target. Next, the bull's probably looking for this measured move. In this case, we came close to it, but we could not get very far above the prior day's high. And you can see what happened here. Spike in channel trend, and the channel ultimately evolved into a trading range. And it was a steep pullback down to 24 that was the pullback that the market paid attention to. So spike, pullback, channel. The channel ultimately evolved into a trading range, testing the start of the channel down here. You can see what happened when we retested this price, more buyers. So even though the market seems to be collapsing down here, it's already maybe 2 legs down, big tail on this bar, not ideal for the bears. And the context is bad, testing what might be the bottom of a trading range that is developing. Through here, the market was getting squeezed. We started to create higher lows and lower highs. You can see it as a triangle, breakout mode, and eventually through here, we got the bull breakout attempt. Lots of consecutive bull bars, big distance, second leg up likely. 69 a pullback, but testing the beginning of this channel, so 62, 63, bull breakout, and the channel phase beginning somewhere in here, more clear on a smaller time frame, but channel phase beginning around here, and we channeled up, pulled back to the start of the channel, and then had a second leg, but ultimately this channel evolved into a trading range. And here we are at yesterday's high. The bulls would like to close above the prior day's high, be stronger for the bulls if they did. And the bears want to prevent that. And in this case, the bears were able to. So we tried to break out of the prior day's high once here, and then had a strong rejection down to here. We tried again here, but there's a less of a breakout, less distance here compared to here. And now you're within this overall trading range. And up here, if you're buying, you might be buying high in a trading range. So we vacuum down. Why do we get bars like 69? It's because of the trader's equation. You have traders buying up here. Think about it. You have traders buying and selling on every tick. And this is a spiking channel within an overall trading range. So bull breakout, second leg up likely, yes. But in order to buy up here, to justify buying the close of 68, and it doesn't matter if you are flat or if you bought the low tick down here and you're holding long, it's the same trade. You cannot hold long here, stop down here, unless you have a 60% chance of going up here before pulling back or going down here. And that's the problem with the trader's equation here. You're high in a trading range. You're getting a breakout of a prior swing point, but it's not major. There's a major one up here. So we're still within the overall trading range. We're testing this breakout point. Bear breakout, it was tested here, second leg down. We're testing it again, and it was resistance before, so probably will be resistance again. So traders, they can't justify buying up here, but the second leg up is likely, and will probably test the high of bar 68. So what do? They exit their longs, they look to buy lower, and then we get vacuumed down to a 50% pullback. The theoretical stop location, the swing point down here, minimum target above 68 here, and traders try to buy here. And realistically, traders might have stops, maybe a midpoint, the midpoint from the middle line to the bottom. And the reason for that is, let's say you have a stop here. You're betting that we had a rally, we'll probably pull back, but if we do, we won't get even halfway from the midpoint of this rally to the bottom of the rally. So I'll put my stop here, I'll buy here, and going for the minimum target up here, I can make twice my risk. Here's 1 times my risk, and there's twice my risk. So you can buy here, stop here, and you really only need a 50% chance of getting back up here before down here. So your risk reward is good. You risk to here, your reward is twice your risk. In this case, the trade came close, but did not quite get back up there. And there's small market cycles going on all through here because markets are fractal. So if you think about it, if you're a bull and you bought here, 70, 71, good for the bulls. But then we pull back. 73 is a very deep pullback, all the way back down close to your entry price. And so traders are disappointed, and maybe it's clear at this point the market is certainly in a trading range, so traders are buying low and selling high. So if we get above 72, probably sellers there, and you can see 75 there were. And if you count the legs through here, 1, 2, 3 pushes up, testing the high close, a lot of reasons to sell over here, and traders did. So where do we go tomorrow? The bulls had a disappointing bar here, even though it's consecutive bull bars. Not a very strong bar here, inside bar here, decent bar here. But context still bad, just might be simply vacuuming to resistance. And so with this bad signal bar here for the bulls, might be more sellers above. The context supports it, although I'm not sure we're going straight down. After this rally, we may get a pullback in a second leg first, and traders may look to sell a low 2 rather than the low 1 here. Also a bad stop order sell below this bar. It's a trading range bar. We can see based on the 5-minute today, it's a trading range day. And because of that, there's probably more buyers below today's low. Please feel free to leave questions in the comments, and Please include timestamps for any question specific to this video, and I'll try to get back to everybody as soon as I can. I really appreciate everybody for watching, and I hope everyone has a good night. Thank you.